There is a revolution happening in the world of economics, and the rest of the world is completely sleeping on it. This revolution rewrites some of the foundational assumptions of economics and answers some of our most perplexing questions. Questions like, why are economists always wrong? It seems that whenever economics is needed the most, like during the 2008 crisis or post-COVID inflation, classical economic models fail us. The models fail to predict crashes and simply don't match the reality we see in real life. Now, some say it's because economics is not a real science, but there are branches of modern economics grounded in real empirical data while testing falsifiable theories. I think it just turns out that economic science is still in its infancy. The economy in the real world is incredibly complex, and we need science and tools that can deal with that complexity. Classical economics often attempt to avoid that complexity, and in doing so, they have adopted some incorrect assumptions that prevent us from being able to make effective models. And at the center of all of this is, of course, the efficient market hypothesis, or rather the idea that current prices reflect all available information. Such classical economics believes that participants in the markets act as rational, profit-maximizing agents that incorporate that information into prices, leaving no predictable, riskless profit opportunities behind. This should cause markets to trend towards creating an equilibrium between the forces of supply and demand, and so most of our economic models reflect this theory. They attempt to calculate some sort of equilibrium that markets should settle towards if not being acted on by a new outside force. Of course, anyone who has spent any time in the markets knows that this whole idea is flawed. Many market moves are endogenous. They come from within the market itself and not from external news. For instance, a short covering rally is a perfect example. We see far more volatility than the changes in information would justify, a problem known as the excess volatility puzzle. But then there's this whole rational agents thing. Come on, guys. We all saw the GameStop thing. This idea that market participants are rational is a complete joke, and I really don't think anybody in the industry believes it anymore. It's just a doublethink lie that we all repeat to prevent anyone from questioning the results that the market comes up with. And even for people that are doing their very best to be quote-unquote rational, there's still some significant roadblocks to accomplishing that. We don't have access to all the information we might need to make a rational decision, or we lack the sophistication necessary to calculate an optimal solution. The reality is that most people are simply relying on heuristics, general rules of thumb that work well enough most of the time. So what we find in reality is that agents are boundedly rational. Remember that term because it comes up a lot when you're researching this stuff. Boundedly rational means that we want to be perfectly rational, but there are limitations in our ability to do so. We face cognitive limits, rely on heuristics, and are influenced by psychological biases. And in a world with boundedly rational agents, we don't end up with the clean equilibrium described by classical economic models. Instead, we get a dynamic system that better reflects the chaos we see in the real world. We have entered the world of complexity economics, one where the individual interaction of agents in a system can lead to emergent behavior at the higher level. When a system has such emergent behavior, scientists call it a complex system. For instance, large language models like ChatGPT have emergent behavior. At its base level is just a bunch of individual nodes called tensors that perform calculations. But when you add billions of these tensors together in a neural network, we get emergent behavior that basically allows ChatGPT to talk to us. And once you understand complexity, you will see it at work in the world all around you. So many of the recent developments in society, including the recent explosion in the use of artificial intelligence, is leading us into a world that is more and more complex. So understanding and managing complexity then becomes the quintessential issue of our time, something that helps us with other big issues like approaching the singularity, or dealing with climate change. And this means that we need tools to help us study and deal with complexity. Enter agent-based modeling. Using the power of modern computing, we can create millions of agents, assign behaviors to those agents, simulate those agents interacting with each other, and then see what emergent properties evolve in that system. For instance, we can create agents that model the kind of heuristics that we think people might be using in the real world, and then seeing how well our modeled system compares to the real economy. And what we are seeing now is agent-based modeling really taking off, with the technology giving us insight into how recessions happen and how to deal with inflation. The way that I try to trade is kind of like an agent-based approach. I create a different model for different types of participants in the market. There's hedge funds, primary dealers, sovereign wealth funds, etc. And then I'm combining what I think those participants will do that day in the market in order to predict an imbalance that could lead to a trade. And I'm sure that while you're watching this video, you probably already have some ideas of your own that agent-based modeling can tackle. And I would love to hear about them. Let me know in the comments, what are some potential areas of study that you think agent-based modeling could help us tackle? I personally would like to see more models attempting to address the potential economic consequences of reaching the singularity, or rather this point at which artificial intelligence becomes so advanced that we just can't keep up. If you are interested in this subject, I want to strongly recommend reading the recently released book Making Sense of Chaos by Doyne Farmer. Doyne is one of the OGs, and this is really the most complete book on this subject, geared towards a general audience. And then beyond that, there are so many studies that you can read, and there's new stuff coming out all the time. Because here's the thing, I didn't come up with this stuff. Almost none of the information that I have given you guys on this channel came from me. This is all looking at empirical data. There are so many very talented people at the forefront of this field of research, and I just happen to be the lucky guy on YouTube that gets to relate this information to you outside of the academic field. I do hope to have more content on this subject in the future, so make sure you like the video and subscribe to the channel. Anyways, I will see you guys every morning when I live stream at 8:30 Eastern Time. In the meantime, stay excellent, team.